It's good to see everyone. Thanks for joining us today. My name is John D'Agostino. I'll be moderating. In addition to being head of strategy for Coinbase Institutional, I teach a class in Fintech at MIT, which means I failed miserably as both an entrepreneur and an investor. So luckily I'm joined by some great entrepreneurs, great investors in the space. We'll keep it fairly general, fairly high level in terms of thematic. We can dig into specifics if something interesting pops up. So as the audience, if you hear something interesting you want to dig into, give me some feedback. Raise your hand, do something, and I'll probe a little bit. So I thought, Susanne, we'll start with you. You run with the creator of Fintech Circle, Europe's first angel investor network. You're based in London, correct? Fascinating business model. We discussed it prior. Talk a little bit about what you do and kind of what thematic trends you're seeing from investors with regards to Fintech.
Perfect. So I'm the CEO and the founder of Fintech Circle. And Fintech Circle is Europe's first investor network, and we invest only in Fintech startups. So we're early stage investors. And our goal really is to find the best Fintech entrepreneurs to pack before they move into the VC stage. And the way we do that, we have got a group of high net worth investors, based in London, who look for Fintech companies at the cutting edge of our financial service industry. So we define Fintech as both B2C, B2B models, and across the whole value chain, so from retail banking, corporate banking, investment banking, asset management, insurance, the whole crypto world as well. And the way we work is by really identifying investors and entrepreneurs early on. And often it's like almost having a crystal ball, because we see companies before they become well known, in a few years' time. And our goal with the Fintech Circle network is to invest initially when they're looking to raise, just a few millions, and then help to scale them up to grow their businesses worldwide, and help them with our network as well to make sure that they are known to follow-on investors, and that we can help them on their journey to scaling.
Excellent. Terry, we'll flip over to you. You work with a holding company, make a myriad of investments, most in the digital asset and blockchain space. Tell us a bit about your group.
Digital Finance Group. We were established in 2015. We are a digital asset and blockchain investment firm, and we make early stage investments, and then we also do some later stage infrastructure investments. So we're distributed really across the sector, and very long-term and very experimental.
Steve, tell us about DN Capital.
Sure. Is this working all right? Good. I'm one of the founders of DN Capital, a European venture capital firm. We are early stage Series A type investments. I've been fortunate to be on the board of 3 of our exits between 1 and 10 billion. On the Fintech side, one company that is now doing, they're reporting to the street 880 million of this year revenue. We came in when they're doing about 3. 2 other companies, they're now between 100 and 200 million of revenues, where we came in pre-revenue, both profitable. So we do Fintech is about 20% of our strategy, and then we do pure software, marketplaces, and consumer internet is the other three parts.
And on the entrepreneur side, Abdallah, you've built a monster system. I know it from traveling to the UAE. I haven't used it personally, but tell us a bit about the Ultra app.
Sure. So Astra is the holding company that is holding our consumer assets. We are Middle East's biggest consumer technology provider in that sense. We have different assets mainly split between communications and financial technology, with more than 150 million users across global geographies.
When were you founded?
Sorry?
When did you start it?
About 2 years ago.
2 years?
Yeah.
What took you so long? 75 million per year? Come on.
So most of the assets existed, and we just started putting them together about 2 years ago.
Excellent. What round are you raising capital?
No, we're not.
No? Okay. We'll work on that. Terry, let's dive in. Thematically, what are you interested in these days?
We're still interested in early stage products and projects. I think there's a lot more room for layer 1 innovation. Mm-hmm. That's obviously high risk, but it's something we're comfortable with. And then we're interested in businesses that are bridging what we think of as in between the digital asset sector and the traditional financial sector. I think you know, in the next 5 to 10 years, you'll see a lot of growth in that particular area.
So you believe in a multi-layer one world?
I do.
How many?
It's hard to say, but the technology is way too early to pick winners. I think, you know, the sector suffers from the first mover fallacy. You know, first mover advantage doesn't apply in areas where you have high innovation and low adoption, and that describes digital assets.
Okay. Steve, what are you investing in these days?
Well, if I limit it to just things in and around fintech, there'd be two theses that we're working on right now. The first is the interplay between the desire of fintech companies to have a great customer experience and the need for governments to want to regulate that experience, and how to use AI technology to make that move as quickly as possible. So AI for improving KYC, improving onboarding, identification, authentication, et cetera. The second is just a personal passion of mine, which is using technology for financial inclusion, trying to bring people into the middle class. And that's something that we've had a lot of success with in the past at DN.
So we had a chat in the green room, and I found you're very honest and refreshing about this. So I'll play devil's advocate, right? So when I hear financial inclusion, thematically a phenomenal idea, right? Great. But as I mentioned before, sometimes I worry it is code for I can't sell my bad product to this group anymore, and I need a bunch of people who haven't heard about me or know enough to know I have a bad financial product to foist that onto. So that's my cynical reaction sometimes. I feel like sometimes I feel the same way about tokenization, by the way. There's a garbage in, garbage out problem. The worst projects, the worst funds have been the ones who embrace these alternative means of marketing. So how do you answer that? How do you respond to that view?
Yeah. So the focus on financial inclusion that we have falls into two areas. The first is how do you replace existing expensive products with less expensive products? So instead of saying, here's a product that is a new product that we're going to foist on someone, it's here's where people are already being overcharged and we can make something more affordable.
Right.
Example, we have a company called Bridget that we did at the very early sort of pre-revenue stage, is now doing about 100 million revenue and profitable. The company helps people stay out of overdrafts by predicting what they're going to be spending over the next 4 to 6 months, and then showing them in a daily app, here's what your trend line is in terms of your bank account, and when you're about to go into an overdraft, putting in just enough money in their account on a very short-term basis, interest-free, so that they don't have to pay a bank fee. We've saved our customers $750 million of bank fees over the last 3.5 years, and we improved their credit score on average of 30 to 50 points. All this is for a monthly subscription charge of $9.99 a month.
That's fantastic. It's the opposite of predatory lending, solving predatory lending practices versus encouraging them.
Right. And the other thing that we were talking about before was how do you use technology to arbitrage risk? I can take someone who has a 560 credit score overall, but if they desperately need their used car to get back and forth from work, on their used car payment, they might be a 720 credit score. So why should they be charged an interest rate based on their overall credit score if I could disaggregate action from individual and charge them an appropriate rate on the action where they're actually lower risk? That's
fantastic. Susanne, you're in the flow of information. So the way I understand it works is you have this large group of investors. Is that public? Can I say the number? 70 or so. And then you have a much larger social media presence. You're gathering all this information on what LPs are interested in. And then that informs the types of startups you bring into your ecosystem, right? So what are what are investors interested in these days?
I think one topic is financial inclusion, like you just said. So that's a key trend which we see. And the way we also see it, it's not just about emerging markets. You know, it starts at home. It starts in the UK, where 40% of all people have less than £500 in their savings. You know, so it's financial inclusion is really a global problem, and so we're looking at this as a huge opportunity to provide and to invest in startups which help people in their debt consolidation, you know, in savings, in kind of bridging and just growing, you know, their wealth. The second area which we very much see interest in and we invest in is called green finance, green fintech. So it's about sustainability, about ESG, it's about, you know, carbon footprint measurements, for example. So, you know, most of you probably don't know if you are carbon obese. That's a new term. You know, I learned this myself and I thought, okay, I don't know if I'm carbon obese or not. So nowadays there are fintech solutions out there which help you to measure your own personal carbon footprint. Then you have got a line, you know, you can start from, and then you can set what's your goal, you know, how do you want to move forward. And so I would say those are the key trends we see. One, it's financial inclusion. Second, it's green fintech. And of course, third, it's the area where fintech intersects with other sectors, such as telecommunications. So we invested in one company which provides workflow, capital, invoice trading for digital assets. So it was founded by people who have got telecoms expertise and finance expertise. That's often the most exciting investment opportunities, where we've got a very unique set of founders, who provide really cutting-edge solutions you don't see somewhere else.
Well, I'm going to get back to, I'll let you think about this when we go to Abdallah. I want you to, same question I asked Steve, how do you respond to the sort of general backlash? I had not, had anyone else heard about carbon obese? Show of hands, anyone else hear about that? I had not. In the US, I'd be accused of carbon shaming people and get canceled, so I can't use that phrase, but I like it. It rolls off the tongue. Abdallah, you are building and have built already this concept of the everything app, and in the US, we can't avoid hearing Elon Musk and his views on building the everything app in the US. Now, it seems to date, this concept of an everything app works really well in China, and obviously it's working well for you in the Middle East. Doesn't seem to resonate in the US. Not so sure about Europe. Are there idiosyncratic parts of culture, structural, regulatory, how come it works in your world and not in my world? or can it? Am I wrong?
Short answer is I think it can, but I just want to step back a bit here and just touch on Terry's point and a bit of Susan's point as well. I think inclusion or financial inclusion will not really happen as long as founders are launching extremely complex banking-like apps, expecting people to adopt those technologies. I think a lot of founders and a lot of companies forget who are their users while they're building their platforms, and forget the fact that maybe 50% of the world's population do not have access to 4G internet. If I can't operate your app or your platform on 4G internet speed, how do you expect me to download it, consume all this data, doing it, and so on and so forth? So I think simplification of user experience was key to everything we do at Astra, and it's key to the success of any of the everything platforms, or if you will, the existence of ultra platforms. And that's where I see, or our vision is that globally there will emerge a lot of those loose platforms, or a lot of those one use case platforms are going to consolidate into ultra platforms eventually. This is what Elon is trying to preach for the US, because he understands that there are so many more people that know how to use Twitter opposed to how many people know how to use the app of Bank of America. It's just a much more intuitive experience. He doesn't need to teach a lot of user experience and so on and so forth. So the understanding is that if you can move, and if you ask people in this room how many people text on a daily basis, I'm pretty sure our friend here is texting right now.
But there's a cost to that, right? The Bank of America app rarely tells me to go kill myself, and I see that on Twitter all the time. So there is a general, there's an overall, there's a reason it's easier.
So again, intuitive user experience is at the core of adoption. You need something that people know how to do. They do every day already, and is just very intuitive to them. And this is where those platforms come from. Now, to your question as to why...
real quick on simplicity. When you say simplicity, so you mentioned simplicity and non-complexity, but you then reference the tech stack. The tech stack has to be lean, so you can deliver it over 2G. Do you also mean the types of products being delivered? So how do you feel about delivering a complex financial product to an individual who can't get 4G?
You can't deliver it. It will never deliver anyway. They can't download it to start with. 50% of the population of people in the Middle East, eastward towards Africa, do not have good enough smartphones to download most of those platforms anyway.
Okay.
So they're not included altogether in the whole fintech plot. Yeah. But when we speak about simplicity in terms of what we're trying to do with building everything on top of conversation and making money text-based, basically, is a whole different angle. To your point, is it going to work in the US and Europe, and why does it work in China? I think China was the first to realize that more people know how to text than people will ever know how to use a banking app. And they said, okay, we need to make money as simple as sharing texts. The tech stacks building this are more complex than building banking apps. The tech stacks building simple UI are extremely complicated as compared to the tech stacks building different financial products. But will it work in the US? It's not a question of will it work, it has to, because of adoption. So if you look at how many people use Twitter versus WhatsApp versus banking apps, you'd see the big difference. And I think Elon is pushing towards that. India, you're already having similar platforms coming up. Russia has their own coming up, and in the Middle East you have us. So I think eventually within the next 2 to 3 years, we'll probably see more and more financial products being launched on top of ultra platforms and not as standalone platforms on their own.
It's interesting because, I mean, as a middle-aged man, the prevailing theory of generational intelligence is that the younger generations get more adept at using technology. What I'm hearing from you is that's not necessarily true.
Well, if you look at it today, the younger generation are mostly broke, right? So they don't have as much money as the older people. So the people with money don't have access to financial technology, right?
Yeah.
And money flows. Money has to flow from one generation to the next. That's how money operates. That's how it's always operated. It doesn't get created magically for the younger people. It has to move from the people with money.
I mean, the US Fed would tend to disagree. It can't be created magically.
That's the US Fed. But it has to move from somebody
There's Larry
with
Summers.
money,
I can talk macro too. Where is he? See?
who are usually older, to somebody who's usually younger. And for you to make that connect, you have to make the financial technology accessible for those who don't know how to use it and those who know how to use it. But even for the younger generation, I think app fatigue is a very serious case that we're witnessing right now. As a young person, you're being targeted on a daily basis by 100 different platforms.
App
and
fatigue.
You don't want that. Yeah.
Okay. Carbon obese and app fatigue. I'm writing down these new phrases. This is great.
Steve mentioned, when you're talking about KYC, how many platforms do you want a KYC for? You want to do it once. It's not an activity that you really enjoy doing, or you want to do it 10 times. Yeah. So I think eventually people are going to KYC once, subscribe to one platform, and everybody has to launch their financial products on top of their platforms.
Steve, I'll give you a choice. You can talk about this concept of universal identity, or we can shift to AI, because I hear AI seems to be kind of hot these days. People are talking about it. I've read a few articles. So, so what do you want to talk about? Dealer's choice.
I'll talk briefly on the intersection of AI and compliance and AI and identity. So we have a company that is 100% AI for doing KYC and identification. In fact, we've got another one that's 100% AI for doing real-time KYC monitoring and anti-money laundering to make sure that individual transactions can be let through, that a human might say this looks like money laundering, but an AI engine could say the patterns indication you should actually have this loyal customer of yours allow this transaction to happen. Eventually, each country will have a single identity platform, but it's a long way from getting there today. Our company, for example, in Mexico, runs identification for people who want to go to football. And so you have your ticket to go to the stadium, and they want to make sure you're not a hooligan, so they can identify in real time, were you the original ticket holder, and are you someone at some other stadium around the world who basically shouldn't have been in that football stadium, or soccer stadium. That engine is the same engine that for Citibank and Banorte and for Rappi in LATAM also identifies whether or not they should be allowed to sign up for a bank account. However, they don't interact yet today. Eventually they will. And eventually you'll have single platforms to do KYC. AI will be one of the key drivers to enable that to happen.
Who's going to own that data set?
So,
is it a public entity, is it government, or is it private?
So there are two theories. One theory is that you have each individual entity with its own data set who contributes in exchange for getting access to everyone else's data set.
Uses zero knowledge proof, and so no one will have to actually say, okay, right, makes sense.
And then on an individual basis, you can anonymize, and then you aggregate if you're going to do any sort of targeting, but otherwise at a centralized level, I contribute all the information about my customers at my local e-commerce company in exchange for all the other e-commerce companies contributing theirs, so that if you know who a bad actor is, someone who uses fraudulent credit cards on your e-commerce site, then you share that with everyone else, and similarly, anyone who comes to your site who is flagged somewhere else, you're made aware of it very quickly. Okay. That's one school of thought. Another school of thought is the governments themselves will own the data sets, and you'll just be able to plug into it.
Which do you think is more likely?
I think that there will be a battle that governments will try to own the data sets, but I think ultimately they won't, is my view. But again, these are very early days.
Yeah. Terry, you're still focused on blockchain and crypto. What's a bigger risk, regulatory risk or risk related to the recent large-scale fraudulent behavior? And before somebody give me 5 minutes, because I don't have a clock. So I don't want to go over time, okay? Give me 10? Okay. So what's a bigger risk?
I think regulatory. The failures that we've seen in the digital asset sector aren't really specific to the sector. They're, those old human impulses of greed, corruption, incompetence, and they've maybe
The investors or the entrepreneurs?
both.
Okay.
And the people who've had that behavior and people who've financed it or encouraged it. Yep. I think at the moment in the fintech sector overall, it's becoming increasingly politicized. You look at the Bitcoin hit piece on the cover of the New York Times the other day, you read about efforts to try to ban AI. And what this means for early stage projects is that regulatory risk is acute. It used to be that you could build a product and launch a business and worry about regulation later, if at all. That's not the case anymore. I think any tech project needs to take a regulation-first approach and at least be aware of the risk. And that's a very different way of growing than what we've seen in the past.
Does anyone in the audience think we should ban AI? Show of hands. Forget about if we can. Does anyone think that we should? If you could wave a magic wand and just ban AI, anyone think we should? Yeah, no one. I thought that whole thing was complete BS. I thought if I were investing in the equity of AI companies, there was no better way to create FOMO than to say, ooh, we have to ban it. Like, that was the most cynical, ridiculous statement that came out from those folks who are clearly heavily vested. Yeah, no, your turn now. And I want you to talk about embedded finance, because you sent that to me as a note, and I don't know what it means.
Definitely. Just to comment on AI, just before, we Fintech Circle, we wrote a book on AI in finance 4 years ago, where we talked about how can AI be used across financial services. Mm-hmm. And there are so many use cases, so I think that it's no question about how useful it is, but I think there's one big element which is called ethical AI or explainable AI, because if you are a financial institution, you're regulated, you can never implement something which is a black box. You need to understand why decisions are being made. You need to be able to explain if people are turned down for a loan. You need to be able to explain to them why they were turned down. So those are the things which I think now become much more of a topic. It's about ethical AI and to ensure that it's explainable to the end users who might be rejected. And it's also understood by board members. Often board members are not the most technology advanced experts, and they need to understand, in terms of regulatory risk, if what they implement is actually auditable, is actually can pass, normal checks and balances. So that's in terms of AI and ethical AI. In terms of embedded finance, that's a huge trend in fintech, and our, initial kind of value proposition is that fintech is the future of finance. So that's what we start from. And embedded finance means that you embed financial services, so you embed financial processes in everyday's life. So imagine if you want to buy a new house and you need to have a mortgage, for example. And so what you would do at the moment, you would go to your bank to get a mortgage, you would go to an insurance company to get the insurance. But in the future, with embedded finance, you would go to the real estate agent, choosing the house you want to buy, and the financial transactions would be embedded in the purchasing of the house, which is the real thing you want. That's why you're doing it. So, which basically means that financial services become more of a background transaction, because it's not the first thing we need. We don't need a mortgage, but we want the house. So it comes in the background. Right. And it's one of the biggest trends we see in fintech, in fact.
Are you saying that it's the same capital pool or the same company, or it's just that it's different companies that are taking those different types of risk and it's just seamless to the user? Because one could argue if you're creating a vertical stack for all that financing, you can argue you're increasing concentration risk.
Yeah, so what we normally see, these are fintech companies which focus on embedded finance. So we've got fintech companies focusing, Uber, we all know Uber, it's an embedded payment solution. You get out of the Uber, you have paid. There are embedded insurtech companies out there which allow anybody as part of the checkout to add an insurance policy, as part of that. So you've got it across all verticals, you've got embedded financial options nowadays.
Okay.
John, just for a second on the AI side, as much as I'm a huge fan of AI, let me give you an example of why you might want to slow it down, because I think that was the challenging question you were asking the audience before.
Right. Okay.
There are programmers right now who could take an online video of your voice and convert it into a lifelike equivalent that could call your mom and ask her to send money to an account. I have a portfolio company, and luckily because I'm an ethical VC, it's only used for a specific application, that in real time, using AI, could strip an accent out from someone's voice and replace it with the same voice without an accent. But you could use that same technology to have any other human being be able to sound like you if we have that recording. So your mom could call a number, think she's talking to you, someone without anything to do with you, based in, say, Manila, could sound like you and say, yes, that was a proper text, please send the money to this bank account.
That's fair. If you want to slow down AI, have them call my mom. But that's a fair point.
How do you slow it down? The cat's out of the bag.
Well, you're seeing Germany and Italy all trying to slow it down. I don't know exactly how you do it, but there will be regulatory catch-ups that will be in place. My own expectation is that the same way that GDPR enabled regulation, you're going to see similar regulations coming out of initially EU legislation and then passing over to California and then across the US. My guess is that it'll first be related to content ownership, but over time it'll be related to other things, such as anonymization of individuals and how do you protect identity.
Abdallah, I'm going to try to tie this in, but I want to give you free rein. What types of next generation technologies are you leveraging and embedding? Because you have a consumer facing product, right? You're touching 150 million people, a lot of which you've said are somewhat unsophisticated, by traditional standards. When you think about the power of embedding some type of AI functionality versus the risks that Terry and Steve are talking about, and Susanne, how do you balance that?
So we've already started doing that. We launched Bottom GPT about 2 weeks ago, which basically is the first ever executional GPT capability. Most of the GPTs that we've seen right now, like OpenAI's or Copilot or whatever Google's going to come up with, are more conversational or informational GPTs. You'd ask it a question, it could answer, and it can give you information. For us, we just went a step further and we launched it executionally, which means you're capable of saying, Bottom, can you renew my government ID? And it will actually execute on that transaction for you. Or can you book me this place? Or can you buy me a ticket from one of our airline partners and so on? Which we think is an extremely important consumer functionality, because if you look at it right now, as a simple user or as an everyday user, do I want to download app X, Y, and Z to book a ticket, book a restaurant, book a flight? That's 3 different apps, 3 different logins, 3 different usernames and passwords and blah, blah, blah. While I can have this GPT in my pocket and I can just text into it to execute on my behalf. So that is how we're leveraging it for our consumers, and we're embedding finance into it, so you'd get this bot to be able ideally to send money across borders and transact executionally on whatever executional capability is already built within the ecosystem. Do I think AI should be slowed down? 100%. It is a lot more dangerous than people comprehend. It is a lot more, there is no stopping it, right? Because it has sentiment. That's what a lot of people don't realize, that it has opinions and sentiment, and it has a mind of its own. So eventually, after you create the data and you've trained this model enough, it doesn't listen to you anymore. It just makes its own mind. And if it thinks that it should call your mom and ask for money, it will call your mom and ask for money. And you're not going to stop it because it thinks that is the right thing to do. And that's how powerful the capability is becoming. So now I think it's on companies like us and like Terry mentioned and like Steve mentioned as well, it's on the AI regulators as well to enforce those companies to build the monitoring tools and to build the compliance and risk control tools within those models as they're getting launched. But this is how we're launching our part of.
Does anybody want to change their vote based on what you just heard? Does anyone now think that we should pause or? Yes, one courageous person. You have a question, or you're just saying? You have a question? Yeah, sure.
So with AI and the regulation, isn't it like anything like cryptocurrency or technology? Like it can be used for good or bad. So how do you differentiate the good actors from the bad actors?
I think I want to touch on Terry's point here. If you look at anything that was ever created in human history that could have been used for good or bad, it was always used for more bad than good. Unless the banking system, the regulation, unless the regulator steps in and there is a very strongly enforced regulation, there is always more appetite to use it to serve greed or serve some human sentiment other than public good, right? So there needs to be somebody that, or there needs to be a regulatory body that comes in and says, those are the lines you can operate within, and those are the technologies that need to be built. It can definitely be used for a lot of good, but then if you just throw it out there and say who wants to use it for good and who wants to use it for bad, it's probably not going to pan out very well.
I have to say, for a consumer retail-facing product, your assessment of the laziness, incompetence, and technical illiteracy of the average human being is really frightening. But I don't disagree. I think also, Rachel, for the first time we're seeing a technology that can be optimized for a negative use case, both at scale, which can also self-adapt. I think that's the idea, right? So even if you have robocalls, like robocalls are annoying, but somebody has to set those up, somebody has to pay for them. The notion that an AI could optimize itself and self-fulfill and scale, I disagree a little bit to the degree of sentience that exists. I think it's still more mimicry than sentience. That being said, we've never seen something that can self-optimize. So I was on the board of an AI, this is a year and a half ago. First of all, ChatGPT has been around for a while. What we're seeing is just the consumer reveal of ChatGPT. The underlying AI at MIT and other places is far more advanced than that. There was a company I was on the board of that tried to use AI to optimize for insurance sales. And within an hour of turning it on, it broke every law in the US for redlining. It was the most racist thing ever within 60 minutes. And we turned it on, we all screamed and we shut it off and then just prayed that the police didn't show up. And then we shut the whole company down because it started to, we told it, or I was on the board, the management said, optimize for this outcome. And it said, okay, and it broke every social rule and everything to get to that outcome without our involvement. I think that, I don't want to put words in people's mouths, that's kind of what scares everybody. Okay, so we have 3 minutes left. Last comments. As we all know, people don't remember anything when you speak publicly, so what do you want them to remember? I'll start with Steve.
So Europe is well positioned right now for everything you hear about as being a really good vintage. I don't believe in good vintages just because things are cheap or things were overpriced last time and getting repriced. Mm-hmm. I think things are good vintages when you have an opportunity to build competitive scale and barriers to entry before other competitors get financed. And Europe is well positioned right now because of some macro trends related to where AI engineers are based and where they're migrating to, what's happening in terms of consumer demand for impact and how that's changing consumer buying behaviors. Mm-hmm. Because of that, this will be a good cycle for European venture, possibly better than for other geographies.
Okay, so if you're a European startup, Steve will overpay for your equity. He doesn't care about things being cheap. Terry, your turn.
I think with any kind of tech innovation, it's important to think about what social and economic problems that technology is either responding to or solving for. This is true for AI. I think it's true for crypto and blockchain. And in that particular sector, the true innovation there for me, and this relates to the earlier discussion about financial inclusion, is this idea of censorship resistance. This idea that you can have an independent network of value that could be transferred and stored and protected by each individual. That particular innovation is, I think, very fragile. And as the sector grows and as the regulatory risk increases, that's something that I think we need to continue to protect.
Wonderful. Susanne, final word?
I would say that one key area is diversity and inclusion. You know, when we look at our room here, we've got not enough women yet here. We've gotten some, but not enough. But I think in the next decades, I think it will be the generation, the next decade of women. You know, women in powerful positions, female investors, female entrepreneurs, diversity, also across ethnic diversity. And so I think that's something which is really good because we have not seen it in the past. You know, we have seen not enough female entrepreneurs, not enough female investors, but I think we're seeing the beginnings, you know, of a big trend at board level as well. And so that's what I believe is going to happen. I think it's a very good thing. And I think we're at the beginning of a huge shift towards a more equal and more diverse society.
Wonderful. Abdallah, take us home.
I think my main point would be around if anybody here is trying to build any financial products or is trying to invest in more fintech, I think there needs to be a lot more thought put into the end users and the user experience those people are going to go through, and how simple it can be made so that it can actually be adopted and not just thrown out there as an additional product. So yeah.
Wonderful. I want to thank everyone. Big round of applause. Appreciate it. It was great. Enjoy the rest of the conference.